Hello, I'm Amrit and I'm the co-founder and CEO of Exponential, and I'm your host. I'm delighted to welcome you to the Underwriting Intelligence Podcast today. Today, I'm joined by Robby Allen, principal at Vertical Scale, where he helps insurtechs, carriers, and venture-backed startups scale technology and operations. Robby brings deep expertise in distribution and underwriting innovation. He advises on data, APIs, and automation as well. He guides investors and carriers, navigates adoption challenges, and focuses on the people side of transformation, ensuring technology, culture, and trust align in regulated environments. Robby, welcome.
Thank you, Amrit. So glad to be here. Pleasure to be here.
I'm super excited to speak to you. We've got to know each other over the last couple of years. One thing that we didn't talk about in your intro is that you are a long-suffering insurtech vendor by training as well. So you have spent lots of time and energy selling software to one of the most complex industries in the world. And I think one of the things I'm super excited to dig with you today is just on that kind of empathy, relationship building. Having been on the same side of the table as we are, I think there's going to be some super interesting insights from talking to you today. I'm sure you've got the scars to show for it.
I definitely have the scar tissue to show for it.
Good. Well, look, what's top of mind for you and the tech companies that you work for as we race into 2026? You know what it's like when you do long sales cycle stuff like us. 2026 began 3 months ago. So tell me, what's on your mind?
It's not going to be a groundbreaking answer, but I think that every insurance enterprise that I'm coming across in the work I'm doing is talking about where are we seeing kind of value and tangible results from AI across the business today. I think at this point, we're deep enough into the cycle where most companies have been, in a lot of cases, mandated. What are we doing with AI across not just underwriting, but distribution and internally our operations and support and all these different functions? And most companies at this point have done some level of experimentation between deploying vendors to help solve problems and building in-house. And I think going into 26, we've gathered some data. We've figured out what are some things that are working and certainly what are some things that maybe haven't shown tangible value. And we're hardening that strategy a little bit going into 26. That's what I'm hearing in the market. I imagine for you guys, it's, it may be similar. I'd be curious.
Yeah, definitely. One of the things that I think a lot about when you do enterprise software is, your job as a kind of seller of enterprise software is to really get to the crux of what your customers care about. And I think, when there's a platform shift like there has been and the world kind of wanted to AI all the things, like you sit down with a customer and you talk about like, where are the challenges that, we do this, we're like, what are the challenges you're facing when it comes to AI? And it broadly over the last, 18 months, it's been everything. Right. And then, as you say now, when lots of experiments have been run, ultimately it has to move from experiments to reality. So I see something very, very similar. For us, it was really important that we took kind of a step back and thought about where we would place our bets. And now we're seeing very clearly where customers are doing that too. So totally agree.
Yeah. And I think it's interesting in insurance, right? Like you spend enough time with, a chief information officer at a big insurance carrier, and there's often I find almost like a self-deprecating sense of humor about the adoption curve of technology inside of a big insurance enterprise where, really the joke is like we're actually moving more from on-prem to the cloud still. And now we've got this whole sort of like wave, right, of like AI
100%.
solutions. And there's like this question of like, what are we doing to adopt it? And I think like on the one hand, you would expect that maybe the adoption curve for the insurance industry would look similar to past technology shifts, meaning it would lag a bit behind other industries that are maybe more kind of consumer driven, for example. But I think interestingly, I've also seen like real traction in some kind of core use cases where there's been an opportunity to like compress time and create cost savings and pass those cost savings through to the policyholder. So I think it'll just be an interesting thing to watch in 26. Like, are we able to sort of jump from almost 2 generations of technology ago into sort of some more concrete AI adoption in the insurance industry? And I think it'll depend on, frankly, it'll probably just depend on the level of execution. And how good are we at actually getting these solutions in the market?
Yeah. I think there's a lot of fixed preconceptions when it comes to that kind of gap jumping kind of exercise that you talk about there. Like when we talk to some customers, the prospect of designing and building a rating model in half an hour to an hour is just incomprehensible when some of the projects, even 2 years ago, were taking 3 months. And actually, like, it's actually quite a hard challenge just to shift the kind of mental frame of reference, right? I think a lot about that. And so I totally agree with you with respect to like actually the execution side of things, but also I think preconceptions that people have and how much they're willing to try things and like, maybe suspend disbelief a little bit too. Cool. I'm super interested. One of the things I wanted to talk to you about on this show, you were CRO at AgentSync, awesome company, doing something quite different to HX, but ultimately selling large software deals as a vendor into the insurance marketplace. I'd love just for you to share some of the biggest lessons you learned, from selling software in the insurance market from that time you had. And particularly, I think, again, if you take a customer centric view to sales, you want to work out how to like make the sale work for both sides, right? So I'd love to hear about like things that you think large financial institutions, insurance companies in particular, and tech companies can do to work better together, actually, when they work together in a vendor engagement?
Yeah, great question. Thanks for the tee up. So, and for context for the listeners, AgentSync is a distribution management platform, the leading distribution management platform that focuses essentially on producer agent led insurance distribution and getting those agents sort of from the moment they raise their hand to ready to sell and actually placing policies. It's like many workflows in the insurance value stream, it's kind of wrote with manual checkpoints and processes that kind of slow things down. And AgentSync was the first platform to kind of bring all of those steps together to help compress the time it took to get producers ready to sell and get them producing more. And yeah, that is on a different sort of level of headquarters and underwriting, but these things are connected in certain ways. And I think like some of the lessons, I guess, looking back at AgentSync, where in the beginning we were selling to sort of the middle market brokerages, the kind of top 10 to maybe 100 brokerages in the market. And by the end of my time there, after 5+ years, we were deploying end-to-end enterprise solutions for the biggest carriers across property, casualty, and life annuities and health. And those are obviously very different problems to solve. And I think that there are still like a couple maybe principles that I'm carrying with me sort of from that experience that probably apply to others in the space. And one of those was that like the function of compliance and agent onboarding was thought of as like this back office function where essentially like you'd only hear about it if something went wrong, basically, and the expectation was perfection. And so what we found out was that as we sort of unpacked that process, it touched all of these different departments, from distribution to marketing to operations. And by bringing a platform together that could kind of connect those different teams and actually visualizing a lot of the underlying data that you collect from the agents that you're working with in the field, you can create a ton of value across these different teams and departments that was a little bit counterintuitive, I guess in the beginning. So I think that one of the things I'm seeing to kind of connect this to 26 and AI and sort of some of the things that listeners are thinking about, there's a lot of emphasis on AI across the business. And I think one of the good things that's happening as a result of that is there's these AI committees that are coming together and sort of creating governance and looking at how are we doing these different things across different teams. And in doing that, we can actually start to connect some of these workflows. And that was a big focus of ours at AgentSync, is how do we connect this distribution problem into underwriting, into these different parts of the business. And that takes a lot of work because you're talking about a bunch of legacy systems that have to be considered and broken and put together. And in some cases, they're not even online yet. And so those implementations can be big. And you have to think about how do we like piece that together in a way where we're starting with something digestible and small where we can create value and then building and scaling over time. I imagine I'd be curious, on the HX side for you guys, like when you think about I don't know, the size and scope of these projects, how do you think about starting small versus starting really big and transformative?
Yeah, it's a great question. I think you touched on two things there, right? Which is one, having a very clear kind of digestible, aligned mandate for what the purpose of buying the software is. And that's a surprisingly hard problem in a very large transaction where there's potentially thousands of users at various levels of altitude. right? And I think that's a really hard thing to do in the first place. And I think, the projects we've seen and the engagements we've had, which have moved very quickly, are where that alignment's been done very early. And the ones that have moved maybe more slowly is actually where through the sales process, through the engagement process, actually a little bit of just joint discovery between us and the client actually happens. So I'm saying that to frame like the point about how you were thinking about like how you chunk it up and how you think about small versus large. I think in large enterprises, particularly with the nature of the software we sell, right? HX is mission critical transaction pricing, underwriting transaction software. Like, you always use the example that like Stripe can't turn off, can't just stop if they feel like it, right? People don't get paid. Stripe doesn't work, right? HX is a similar kind of level of mandate. So what very naturally happens is people want to make the project very big, right? Because they go like, this is really important. And so we got to spend lots of time, lots of money, which what I actually find like what the counterintuitive thing tends to be true is that actually running a small experiment, working out, maybe in a slightly less mission critical area originally at the start, and then taking the lessons learned from that and scaling into it is just as valid, just as valuable. But, look, the fact of the matter is we sell enterprise software, we are probably 100,000th the size of our biggest customer, right? So our job is to work within the operating model they have. I think I've learned over the last 7 years just to be much more open about the trade-offs that we know based on $50 billion worth of transactions and 50 projects, right, that our clients are going to make through this. So a long answer of saying there is like multiple ways to do it. Both have advantages and disadvantages, but you got to just really understand the costs and benefits of both sides, I think.
Yeah, super well said. And I think that comes from experience. Like you have to go into these projects and experience a large transformative implementation, and you have to experience a smaller bite-sized kind of crawl walk run approach, if you will, and see the outcomes and trade-offs of both, so that you can inform clients. And of course, like your clients are going to have their own set of experiences that they bring to the table, but we would do both at AgentSync. We would do these large combined transformational projects, often with big providers like CRM or ERP solutions, or we would be connecting in. And when you're attaching in some ways the fate of your project to another bigger one, like there's certain things that are going to be out of your control, and you need to be eyes wide open about that and communicate that to the team that's depending on the solution that you're doing. I think the theme though across all of it, when I think about being a best-in-class vendor, particularly a venture-backed vendor in the insurance market, is like you just have to play the long game. It's really easy to think about short-term and medium-term goals for you as the vendor and the company, but our customers think about things on 10-year time horizons. And that is so fundamentally different than other markets. Like every decision that you're making needs to be a mirror, in my opinion, of thinking about these things like your customers do on a much longer time horizon. And that usually gives you the guidance you need on these different projects. So that's another theme that I think a lot about, is how do companies and vendors in this space that are providing and supporting for the insurance market demonstrate the sort of early days traction they need to, while playing a much, much longer game. And part of that is like picking the right size and scope of these projects in the first place.
Yeah, I love that. It's such an important take, actually. Probably one of the key takes, I would say, for people on both sides of the table listening to this podcast, right? That actually getting an understanding of that is often a really key kind of a predictor of success, because very naturally technology companies, venture-backed ones, have got this growth imperative, right? And actually clients as well, right? They want to get going, they want to implement, they want to have the success, the ROI from projects. But the reality of life is that implementing transformation at a billion to $100 billion balance sheet business takes time, and actually getting aligned on that is really key. If I can think of some of the mistakes we've made at HX, it's where actually there was a bit of a mismatch in that, and and all was well intended, but actually we were not pragmatic about actually the time horizons that people really wanted to operate on, whether they were fast or slow, actually.
Yeah, and I think that's a similar, going to an earlier part of the conversation. Like I think that is that theme, which I think is true of software as a service solutions, is just as true, if not even more front and center with AI, where it's doing something very large and ambitious in scope initially. My observation, spending 5 years at AgentSync and now working with 4 or 5 of sort of some of the leading insurtech vendors that are working with the market, is that those are less likely to be successful in the beginning. We're in the early days of this, and so can we find a wedge in the value chain that's important, that's critical, and that we can scope and solve quickly, and have an aligned plan where we can kind of grow from there with the customer? And I think that I expect that same theme to carry through. And I think that that's frankly the way that the biggest insurance companies are thinking about adopting AI right now, is this iterative approach where we create and demonstrate value, we make sure it makes sense on both sides, scale and grow from there.
100%. And maybe, on the theme of AI, with respect to insurance kind of projects, like, again, you're working with some super interesting AI forward vendors in the space at the moment. What's the most surprising thing you've seen about over the last 6 months about how AI has changed the way software is sold? And I ask this question because I think, we're using AI throughout our whole company now, and I think it'd be really interesting for carriers or the insurance market to understand what to expect from the way top technology companies engage with them.
Yeah, great question. I think when I think about software as a service, I think about deploying a repeated pattern of a software instance across your entire customer base, where that repeated pattern has similar characteristics and essentially the same underlying data model underneath, so essentially you get maximum scalability and margin as a vendor, right? And I think what's always been different about the insurance industry, for better or for worse, is that insurance companies think of themselves and the deployments they're doing as special and unique and snowflakes and needing to be configured and customized. What I'm really excited about with AI, and what I'm seeing about that was maybe a little counterintuitive to me, was that AI actually really enables a level of efficiency for the vendor to customize every single instance and deployment of their product for the customer to their specifications in a much lower cost and quicker way. Where before we needed software engineers, systems integrators, this whole network of people just to get the core system and the underlying data model up to standard for value to be created, we can have a forward deployed engineer in the sales process as a vendor working with a salesperson and the customer, where every day we're wiring up and training a model that is highly configured to that customer, and they can do a pilot and see value instantly. And I think what's exciting about that is that insurance companies no longer have to take the great leap of faith of signing a massive order form and a massive implementation project spec with the sort of like delivery of value like deeply in the distance on the other side of the canyon, and just take the jump and expect that both sides are going to figure it out. Instead, we can, as a insurance enterprise, we can require that we see value during the sales process in a pilot, and the vendor is capable of delivering that in a much lower cost way. So to me, that dynamic has really changed the way that not just insurance companies, but broadly like big enterprise and regulated markets buy, because you can have a much higher standard for like the fidelity in the product you need to say, okay, this is for us, this meets our requirements.
Yeah, I love that. And I think, you're clearly at the cutting edge. You're seeing, that trend of the forward deployed engineer, the much deeper customized deployment as something that we're starting to see in the market, the pull from our clients and prospects as well. And I think it's so interesting, isn't it? Because actually the way software can be adjusted to demonstrate value is happening so much more fluidly, and therefore happening like, you can see the results so much more quickly than we've ever seen before. Again, I think, some of the things you said with respect to execution earlier in the podcast, I think really stand here. Like the best companies are going to become useful, right, for their clients much earlier. I think that's something that our market on the insurance side should really come to expect and push the vendor side very significantly.
I completely agree. And I think, this whole notion of a forward deployed engineer, I would just encourage insurers out there that are evaluating software and are thinking about buying, in the SaaS era, these engineers were off limits. Like it was the job of the CEOs like Amrit of the world to say, we are not interrupting the engineering team under any circumstance. Like we are heads down. We're building, we're building this mega platform that's going to be the same for everybody and serve every use case. That's changed where now if you're not as a buyer interacting with a technical person during the sales process who is showing you demonstrated progress in the AI product you're evaluating, understanding you and your needs and your specific circumstances better, then you should throw the flag and you should ask why that isn't happening, because that model works. And I think that the best vendors are embracing that and pulling technical resources forward and offering them to customers as a way of showing this is how quickly we can create and deliver value for you.
Yeah, 100%, 100%. Changing tack a little bit. Your new enterprise is called Vertical Scale. Like me, you're a big vertical software fan. We've talked a lot about this between us. Tell me a little bit about your take on vertical software, and particularly how you frame the vertical, specialist value proposition versus the horizontal slash generalist one. Particularly, nowadays there are some incredible generational businesses out there in the horizontal space. The likes of Databricks is the obvious example, right? Where a whole generalized analytics stack is growing up. On the other side, you've got HX thinking about that stack completely vertical specific. How do you frame that, particularly, the companies you're working with, both sides of the table? How do you think about this?
Yeah, absolutely. So for context, I focus at really as an advisor and consultant, my firm with regulated verticals. So that's insurance, financial services, healthcare, government, basically the verticals that are kind of the hardest to break into and have the highest barrier to entry and sort of like the domain knowledge you need to have. With insurance really being the kind of center of the bullseye for me as that's my background. Why do I love vertical software? I think that because the best vertical software companies are enduring, and they're enduring because, as I kind of talked about earlier, most of these verticals that think of their problems and their software stack as something that's unique to the industry that they work in for a variety of reasons, they think about things over a longer term time horizon and they hold their vendors to that standard. And so the prize as a great vendor in the space, you think about, the great insurtech companies, and I still think we're in the early innings of this, and certainly HX is on this trajectory, or the Guidewires of the world, where you keep customers for decades and decades, and have this opportunity. You're given the opportunity as a vendor to absorb more and more of the problems and the opportunities and workflows in that vertical stack because your customers trust you, because they know and they've seen you've demonstrated value, and because they know you understand their market and you have the subject matter expertise you need to deliver on that. And I think that's just a harder thing for a horizontal company to do. The best horizontal companies create some sort of paradigm shift where everybody just adopts it because something fundamentally about the way that technology is used has changed. Databricks a great example of that. OpenAI is sort of the generational, consumer and now sort of enterprise company of today. But I love the vertical software opportunity because of that. And I think on the other side of it, it's because your customers in a vertical market have spent their entire careers in this specific vertical. They live and breathe and sweat the details on the way their market works. And it's as a result of that, they hold you to a really high standard for what you need to know to solve their problems. But once you do, I mean, some of the relationships I'm taking with me from the time I was at AgentSync with some of the best distribution and compliance leaders in the market are ones that I will like value forever, because these are folks who know, I mean, their mental model for the way the market works, they've got it down cold. And it's just for me personally, a really cool thing to be a part of. Almost that sort of university, that sort of collegial environment, if you will. So those are a couple reasons why I think I love working in vertical software. And I think especially as we move into this AI era, I think AI is looking for, especially in the enterprise, specific use cases. And I think verticals offer the opportunity to get very specific. I used that example earlier of what a great sort of pre-sales process looks like, and sort of demonstrating pilots and value early on. I think that AI is uniquely suited to serve verticals, especially like hard to break into verticals like like insurance. So those are a few reasons why, but I could wax poetic about the vertical market for hours, as you know.
I mean, what I really liked about your answer was really you talked about something which I think is so important and so left out of the software conversation, which is that of attention. And I know that sounds really funny, right? But actually, there's been lots of talk about the death of vertical software with this hyper intelligent, super intelligent kind of AI that's coming. And I think one of the things that people don't think about is that, particularly in enterprise software, right, how much the people selling the software care about your specific problem over the time horizon that you have to implement it is incredibly important, right? So, I often use this phrase at HX: we want to build a company that's going to last as long as our customers do, right? And it's made me choose some ways we optimize the business, right? HX is very well known being very capital efficient, right? We talk a lot about optimizing over a very long time horizon. We don't make decisions for the short term, including our AI initiatives. We didn't just jump in and build GPT wrappers at the start. But actually, one of the things that whenever I talk to our customers, I was like, you need to understand that for us, this is what potentially is a multi-decade partnership, and we're going to optimize to that. Like, I'm not going to be going, do you know what, I've decided to go to pharma or retail as part of my strategy, and all of a sudden that's my next focus. Like, my focus is entirely here. And of course there are sub verticals, right? Of course that HX is excited by the SME mid-market sector. We're not excited by the admitted market in the US now, but my attention stays focused. My kind of essence of being stays very focused on insurance, and I think that's something that's often not talked about, right? Particularly in a space that's so frothy now with the number of different horizontal and vertical vendors out there.
Yeah, and it takes discipline to say no to all of these sort of adjacencies and opportunities that come your way, especially at a company growing as fast as HX. But at the end of the day, if you pick a vertical and you make that commitment to your customers, like you guys have done, and like I think a lot of the great vertical software companies in the insurance market have done, your customers will tell you what to build. And I think that they'll tell you what to build, and they'll tell you where their problems are, and they'll be very open with you when you demonstrate value and demonstrate that you're playing the long game. And I think that, like, the prior point, I think that's a little bit of a faux pas where there's maybe a wisdom out there that says don't your product roadmap should not be a direct reflection of what your customers tell you to build. Sure, you need to have a unique point of view about what fundamentally needs to change. But at the end of the day, if your customers are guiding you towards these solutions, and with the combination of AI, you're like way more efficient at building those solutions and demonstrating value more quickly, it really works. So I don't subscribe to that personally. I think that your customers should have a very a material and outsized impact on your product roadmap. And I think that, like, in this era of AI, that should be something that's a lot more cost efficient to manage as a vendor personally. And I think that the vertical market dynamic of going really deep allows you to do that better than a horizontal vendor would.
Yeah. Totally agree. Robby, time's gone incredibly quickly. That was an awesome conversation. Before we sign off, tell me, how can we find out a little bit more about you, what you're doing, whether you're a carrier, whether you're an insurtech, or a tech in the regulated space? I always like to joke you're one of my friends who's got the biggest kind of pain appetite. You choose the hardest regulated industries for fun. So, there's a specific group of people in the audience who'd be very interested to learn more about you. How can they do that?
Totally. Yeah, thanks for asking. So LinkedIn's probably the best place. You can find me just /Robby Allen, ROBBY, or verticalscale.ai is my website. Drop me a note. I'm doing a lot of exploring problems right now, both with carriers and some of the bigger brokerages out there, as well as with vendors, and helping them think about how do we bring the best product to market to solve some of these problems, and almost playing matchmaker a little bit there. So please reach out. I'd love to connect. And Amrit, thanks for having me. I think it's so cool that you guys are doing this and you're driving this conversation forward. And it was a pleasure to be a guest on the pod. So thanks for having me.
Thanks for coming, Robby. That's it for this episode of the Underwriting Intelligence Podcast. I hope you found it useful and thought-provoking. If you did, don't forget to follow or subscribe wherever you get your podcasts. And if you know someone in insurance who'd find this valuable, please share it with them. I'm Amrit, and I'll be back in 2 weeks with more insights that matter in the insurance world. Until then, thanks for listening.